Welcome to another talk on money, business, and investment. My name is Jose. I'm the founder of the company brand here at Master Investor. If you're new to our community, make sure to subscribe, turn on the notifications so that you know when we go live or upload a valuable video that can change your finances forever, as long as we apply the information that we're learning every day here in our community. Our mission is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. If you're an existing subscriber, welcome back and thank you for being part of our community. Keep a Master Investor working. We have 3 ebooks right now that you can order online through our website or Kindle. If you'd like to have the paperback, just go to Amazon. However, on our website, you'll have additional assets because each ebook has turned into a vivid digital course where we're adding assets as we move along. Remember, it's all about the information that we're receiving. What are we consuming, right? Also, as what are we drinking? What are we eating, right? We are what we eat. We are what we think about. So everything that we put into our minds and bodies needs to be checked out before we even get involved with that. Make sure that we are aligning ourselves with the right mentors, with the right communities. Master Investors always here to provide the good and bad news of money, the business principles that work in all economies. And today we have a great topic on investing in real estate investment trust, or also known as REIT. Okay, and it's all about understanding how to create passive income, how to build our assets column with real assets that we control with our companies. A lot of people spend majority of their life working at somebody else's dreams. Now, there are those people that do love their job, and even them need to understand how to build wealth as well, so that they don't always have the choice to have to work. They can actually retire early if they want to, because they don't have to rely on their job for income, because they have the other type of income that exists. Remember that 3 types of income. A lot of people don't understand that. Majority of people only work for earned income because that's the only income that they've been taught to build. And we go back to history, 1902, right? John D. Rockefeller established the General Educational Board and instilled a mission, which was to create 2 types of individuals that comes out of the school system, from kindergarten all the way to graduating from the university. And those 2 types of individuals, and we always say this in our community, so if you've been here before, you hear me say this. And it's important that we repeat this, because not only for the new partners that are coming in and getting educated financially, but also for us that already know the information, to keep it fresh in our minds, because it's all about compounding the financial education. It's about compounding our assets in our asset column, right? It's all about accumulating more assets so that it produces more excess of cash flow. So it has to do with compounding good habits. What are our patterns that we have every day? Are we mimicking somebody that we admire, right? We need to follow the clues, right? Success leaves clues, as they say, and it's true. You know, today we have more access to everybody that we admire, thanks to the internet, technology, artificial intelligence. So if you want to be a real estate investor, right, and you want to start with that asset class, remember, there are 5 different asset classes that exist. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. Number 5, commodities. Today, we're talking about real estate, but in this type of investment through real estate investment trust is on the paper assets class. Okay, so even though it's real estate, the difference between this asset class of paper assets and the real estate, commercial real estate, is that we're not going to be controlling the real estate specifically, because we're going to be putting the money into the deal that somebody else is going to be controlling, and because we help them get that deal funded, they're going to give us a dividend, a cash flow. Basically, that's what that is. So if you like to take control of your finances and start creating passive income and taking out of your fake assets. If you invest in 401ks, mutual funds, savings accounts, all of that, those are fake assets. Then start moving your money into sound assets that are producing dividends, that are producing passive income. Okay, make money, work hard, and we need financial literacy for that. So let's cover today several different points by the end of this talk that is going to help us build cash flow through sound investing in the paper assets class. Okay, become a real estate inside investor and profit from real estate without having to deal with the headache of owning it. For everyone who loves real estate, are we ready to master how not to be left out of the real estate festivities? Because purchasing, maintaining, and selling properties seem like an enormous hassle. What if there was a method to profit from real estate investing without getting our hands dirty in the details of becoming a real estate investor that actively holds and controls the real estate through companies? Okay, greeting from the amazing realm of real estate investment trust, also known as REITs. Come along with me as we investigate this little known but possible profitable area of the investment landscape, where we may partake in the feast without having to cook the whole meal. REITs, what are they? Real Estate Investment Trust, or REITs, are a unique type of investment vehicle that let us invest in real estate without actually owning or managing properties. Consider it as a chance to become a landlord without having to deal with troublesome tenants or leaky faucets. Companies that own, manage, and even finance real estate properties that generate income are known as REITs. These assets could be anything from office buildings to retail centers to residential complexes. The final flourish, according to law, REITs must pay dividends to shareholders equal to at least 90% of their taxable income. Thus, we won't have to work hard to enjoy a consistent income stream in the form of passive income if we invest in REITs. Types of REITs. Discover our ideal dancing companion. Generally speaking, there are 3 types of REITs from which to pick according on our investing objectives and risk tolerance. Let's examine each type in brief. Number 1, equity REITs. These shady guys known as equity REITs invest in and on real estate. Rent collection from renters is the main source of revenue for them. The most popular type of REITs are equity ones, which are re-owned for offering both the possibility of long-term financial appreciation and a consistent income in the form of passive income. Number 2, mortgage REITs. Mortgage-backed securities and existing mortgages are investments made by mortgage REITs, also referred to as MREITs. These REITs also lend money to real estate owners. The interest on these assets provides the mortgage REITs with their income. Although they have the potential to yield better returns than equity REITs, they might also be slightly riskier. Number 3, hybrid real estate investment trust. As the name implies, these REITs include mortgage and equity components in order to diversify their holdings and strike a balance between risk and return. They invest in both real estate and mortgages. Investing in REITs, how to get a pass to the event. Okay, so how do we get into the REIT fund? 2 choices are available to us. Number 1, REIT stocks. Using a brokerage account, we may purchase individual REIT stocks in the same way that we would shares of any other corporation. Investigate REITs carefully. Select those that best fit our investing objectives and risk tolerance, and begin constructing our real estate empire. one share at a time. Number 2, exchange traded funds, ETFs, and mutual funds for real estate investments are good options if we wish to reduce risk and diversify our real estate holdings. These funds combine the capital of investors who purchase shares and several REITs, offering immediate diversification and expert management. Warning: investing in funds makes it considerably more difficult, if not impossible, to research the companies and property managers overseeing our interests. Because why? Because essentially we're giving our money away to somebody else to do it for us. And ultimately, the bottom line, I want our community to be the ones that actually acquire the real estate, not the ones that are giving their money away. But these are options that exist. So for those who like to take a more easy approach and don't want to maybe get their hands completely involved in the entire process, it might require time, energy to learn. It might be trials and errors along the way when we're building our real estate empire, because we have to learn a lot of things that we don't know. But these are vehicles that exist today that we can invest in. At the end of the day, we need to be aware of all the options, and then we decide, right? Ultimately, we all have a plan, and we are looking at our lives, and we want to have XYZ lifestyle, and therefore we're going to reverse engineer that and figure out how much is that we need per month to be able to fulfill that lifestyle. We're going to create that with assets that we control with our company. So ideally, ultimately, I want us to all control the real estate and learn how to actually put the deal together and be the one raising the capital and acquiring and controlling the real estate. But this is a way to do it as well, okay? The benefits of being a real estate wallflower. Why invest in REITs? After discussing the fundamentals, let's move on to the advantage of investing in REITs. Why are we to think about including them in our portfolio? Passive income. As we indicated before, REITs must pay out dividends equal to at least 90% of their taxable income. This implies that we won't have to do any work in order to receive a consistent flow of money. Bet idiot to the inconvenience associated with conventional real estate investing, and welcome to passive income. Diversification. It is common knowledge that we shouldn't put all of our eggs in one basket. We can diversify our investment portfolio and spread our risk throughout a range of real estate property types and markets by making investments in REITs. This might lessen the impact in the event that a particular industry or area encounters a decline. Liquidity. Because REITs are listed on major stock exchanges, they offer liquidity in contrast to traditional real estate investments, which can take months or even years to sell. This increases the flexibility and accessibility of our real estate assets by enabling us to buy and sell our shares with ease whenever necessary. Possibility of capital appreciation. Although REITs capacity to provide income is their main draw, they also present the possibility of capital growth. In addition to dividend income, the REIT's share price may grow if the underlying properties in its portfolio appreciate in value. In this scenario, we could realize capital gains, income. Professional management. Purchasing a REIT is akin to contracting with a group of real estate specialists to oversee our investment. We can be confident that our investment is in capable hands, since these specialists possess the knowledge and expertise necessary to make wise choices regarding finances, property acquisitions, and management. However, keep in mind that there's nothing more risky than giving our money away to somebody else to do it for us. I'd rather that we take a course on real estate and we learn how to acquire that, which we also have a book on that as well, how to build cash flow with the internet, turn passive income on. Click the link in the description somewhere around this video if you're listening to that podcast. We're also doing a live stream right now, so we're recording and doing a live stream at the same time because we want to reach as many people as possible. So check out the links in the description because they're going to give you access to our tools, resources, ebooks. But inside of how to build cash flow with the internet, turn passive income on, you'll find one of the chapters teaches us how we can acquire our first real estate property for passive income. Okay, so I'd rather ask to do that than give our money away to somebody else. Okay, because we're really not learning anything about investing when we do this. Okay, and it's important that we actively invest. So, but like I said before, we need to be knowledgeable about everything that is going on, the options that exist, so that we can choose what's best for our financial goals. Everybody's wealth number is different, so figure out what is the lifestyle that you want to have and how we're going to reverse engineer and make sure you're pushing harder every day towards our financial goals, learning something new, self-development, and not working for money necessarily for earned income, but for passive income. We're working to build passive income. That's it, rule number one in our community. We work to build passive income and make money work hard through sound investing, which also brings capital gains income. But passive income requires a higher level of financial education, which increases our financial IQ, our financial intelligence rises, and we can solve financial problems. And that is what the foundation of true wealth is in the ability to read financial statements, which that ability comes from having the financial education necessary to be able to read one and improve it. And what it takes to build a company into a brand. We're going to talk about legalities and everything that might seem boring for many people, that we need to learn this because it's how we build true wealth. Once we get over all of our systems and we begin to receive passive income, then there's no limit to how much money we can make while we're sleeping. We can always have that coming in every single day because we are controlling assets with our companies. We're not giving our money away to anyone unless that is your preferred way to do it. Okay, which there are sound investments out there, but the return is going to be lower. If you do it yourself, then it's going to be higher, okay, because there's more control. So that's the key right there, to take control and use leverage. The negatives, dangers, and consequences. It is important to take into account the dangers and disadvantages of investing in our REITs before jumping in headfirst. Market risk. Our REITs are susceptible to changes in the market just like any other type of investment. The value of our investment may increase or decrease in real estate markets due to erratic market movements, fluctuating interest rates, and prevailing economic conditions. Interest rate risk. Our REITs are susceptible to changes in interest rates, especially mortgage REITs. The cost of borrowing for developers and real estate owners may go up in response to rising interest rates, which might lower rental revenue and property prices. The performance of our REIT assets may suffer as a result. Management risk. The caliber of a REIT's management team has a major impact on the company's performance, just like it does for any other business. Ineffective asset management or overpaying for real estate are two examples of poor management choices that can negatively impact the success of the REIT and our investment returns. Leverage risk. To finance real estate purchases and other investments, some REITs employ leverage or borrow funds. This can increase profits when the market is doing well, but it can also increase losses when it's not. When assessing our investing options, don't forget to take a REIT's debt levels into account. Tax drawbacks. We adore real estate investing because of its tax benefits. The earnings from real estate investing are tax-free because debt is typically used to invest in real estate. And all debt is tax-free. Why? Because money is created with debt. 1971, August 15, President Nixon separated the gold standard from the US dollar. From that point forward, money becomes fiat money, an idea, paper money, a currency, and just an idea backed up by confidence. It became debt. is created with debt. So today, money is debt, debt is money. And because the economy works by printing money, by creating debt, then debt is tax-free. Today we are over $34 trillion in national debt, and it's not going to stop or lower itself. It's going to grow and rise even higher with inflation together, right? Because the more money is printed, in the sense it's not all of it printed. A lot of it's printed digitally. Today there's about 135 million notes being printed per day, and it's not the Federal Reserve Banks that prints the money. It's another institution. The Federal Reserve Banks controls the amount of circulation of money that goes into the economy, which they're backing up the system of printing money. And it's the best system that we can ask for if you truly want to experience life on the fast track. If you want to become wealthy, regardless of our background, then this is the best time to do it, because we have technology on our side. We have the laws, tax code on our side for the business owner and inside investor. So we need to take advantage of all of this that is in front of us. People didn't have this type of technology 100 years ago, obviously. I mean, we have seen an advancement on AI in the past decade. So now we can be omnipresent everywhere at the same time with our offers, businesses, right, solving problems in the world, because every business is built to solve a problem in the world. And we ultimately want to have businesses that buy other businesses and other assets in different asset classes. Therefore, they're all free. We learn how to get everything for free because we know how to make money, make more money, because we have financial education. So does it take money to make money? No, it takes financial education first and foremost. And we can also raise money from thin air through direct sales. So do we need to have money to do that? Not really. We can sell something to somebody that is not even created yet, and they will give us their money because they find it that is valuable. And they're okay with waiting 2 to 3 weeks to get it. So we can create money from thin air and raise it. Let's say you had a home and now you're saying, okay, you're going to get out of that home, put it on Airbnb or put it in short-term rentals or half-a-year rentals, and now you put a $2,000, $5,000 fee, entry fee. That is created from thin air. You didn't have to put that there, right? So did it take money to create that money? No, you just put a sign in the front yard that says move in $5,000 entry, and you can move in for 6 months at this much per month. So we can raise capital at all times, and we should train our minds to do that and use other people's money, the bank's money, right? The credit cards that we have to acquire assets to invest in assets that makes us passive income and capital gains income. A lot of people just use debt to buy liabilities. We need to use debt to also buy assets, not just liabilities. We're going to buy liabilities, okay? We're going to acquire assets to buy liabilities. We want to have wealth, excess of cash flow coming in so that we can pay for our living expenses and do whatever we want to do and enjoy life the way we want to, attract whatever we want to experience in our lives, because we have money, which is one of the most important elements that exist, and we should all learn how to master, because it is a game that we're going to be playing for the rest of our lives to the very last day. So if that's the case, whether we like it or not, let's make money our slave. And the way we do that is by learning about money. What is money today? How it has changed? Why it's not real money anymore? So we shouldn't treat it as real money. Money can only be good if it's moving from one cash flowing asset to another cash flowing asset. That's how it maintains its value. But if money is right here in front of us on the table, on the mattress, in the savings account, it goes back to its intrinsic value, which is zero. Every currency in history has always gone back to its intrinsic value, which was zero. Okay, so since gold is not backing the dollar anymore, it has lost about 95% of its value since 1971, which was the best experiment that we could have ever asked for. Like I said, it gives us the tools to become wealthy very fast. We can use debt, other people's money. The government will give us the money to become wealthy. That's the best system ever. We can raise capital, we can use debt, we can use our credit card. If you have a credit card that's $20,000, you can turn that into $1 million. If you do it wisely and you invest it in the right asset, right? You can create $1 million business out of that, for sure. Today, with all the systems and everything that we have, everything is very economic. Like everything is affordable because there's so much competition in the world that you cannot have a lot of things priced at a higher price. They just wouldn't survive. They need to have, the softwares and the tools that we need. They're basically free. A lot of them are. They have a free plan, so you can get started for free. You use your $20,000 to build a brand and do marketing and so forth. A lot of the platforms also allows us to do marketing for free the entire month, and then we pay at the end of the month. So we can raise capital, right? Because that's the job number one of an entrepreneur. We must train ourselves to raise capital at all times. Be comfortable by asking for money the right way. And how do we do that? Well, we need to have a good deal in front of us. We need to put together an investment. Find an investment that exists already. And then we put eyeballs around that investment because it's healthy. It's making this much cash flow after all expenses are paid. That's what the investors and the banks are going to be interested in learning about. The cash flow analysis of that investment. And we need to start with our personal financial statement so that we can understand how to read a business or an investment financial statement and do fundamental analysis on an investment, which is concentrating on the strength and the health of the asset itself, not necessarily the market, okay? And that will be technical analysis. People that look at charts, and that's technical, and also it's good to learn that, but we need to learn fundamental analysis, which is reading the financial statements of the asset, learning more about the asset itself, and studying the longevity of that asset. Is it a brand? Is it protected with the legalities? Does it have a patent? What does it produce that no other company is producing? What does the company do that is unique, that can be protected, that can be trademarked? Is the logo trademark? That's how we turn a company into a brand. We need to add intrinsic value. We need to protect something. And then we need to also have business integrity, which means that the organization is composed of the 8 integrities of the cash flow triangle: mission, team, leadership, cash flow, communications, systems, legal, and product. And then once that's established, then the business is creating a profit. Of course, it must be making a profit. Otherwise, it doesn't have business integrity, and it's creating a profit because it's solving a problem successfully in the market. And we're putting that product in front of those people so easily that they can grab, purchase, and repeat over and over again. And that is true marketing. Sales via a system is marketing. And marketing is putting that product in front of those people so that they can buy on autopilot. So that's what we're going to be mastering: how to use sales funnels, how to create sales, direct sales, how to receive passive income right now. I always talk about the number to create $1 million per year on passive income, on positive cash flow, meaning that that's our profits after all expenses are paid. We need to have $2,750+ per day after all expenses are paid. That needs to be our cash flow every single day. And when we do that consistently for the entire year, which is not that much, if you think about it, if you break it down, and now you start building different assets. One brings 500 a day, the other one brings 1,000, the other one brings another 1,000. Now we're at 2,500. You see? So it's not much that we need in order to create $1 million per year. So where's your lifestyle in that mark? Do you need more than $1 million to live the lifestyle that you always desire? Figure it out, map it out. It's important that we write our ideas down, that we take action on it. So everything that we're learning here in our community, I want us to take action. Okay, we are inside investors, meaning that we are active investors. We are actively investing. Today's article is about a certain vehicle that we give our money to somebody and they give us dividends. Is that better than savings? Yeah, it is way better than savings. But I still believe that if you're going to do that, then might as well also learn how to invest in real estate actively, and how you take control over the property, and how you hire a property management company to take care of the entire property, collect the rents, and so forth. And a lot of the companies will stay with the property. Okay, so when we buy a real estate property that is already making money for the past 20 years, they already have a team in place, and a lot of the property management team will stay with that, as long as we allow it. We need to find those deals, and I show you how to do that inside of our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. So make sure that you go get it and learn how to do that, because we need to invest in all the 5 different asset classes that exist. We did an article and a live stream on that, also a podcast, of course, on the 5 different asset classes and why it's important to invest among them. It's not about diversifying only in paper assets like majority of people do. Mutual funds, ETFs, all of those are fake assets at the end of the day, okay? Because they don't produce any passive income to the investor. It withdraws money from them, and if they withdraw any money before their time is due, then they will get penalized. So it's not good when you lose control of your money and you lose leverage and you don't have opportunity to say what you want to happen next with the asset. So I like us to have control, and I give you these options that exist because we need to be aware of everything that exists right now in the investing world, so that when you talk to somebody about money, they know that you know what you're talking about and that you are aware of these assets that exist that can provide some dividends. But is it better for us to do that than having it in the savings accounts? The answer is yes. Savings accounts, you're losing money because savings can't keep up with inflation. Taxes got to be paid on savings, and it hinders the entrepreneur spirit, just like this does. But the only difference between this and savings is that you're getting some dividends in here, but you're not learning anything either, because you might do a due diligence on the company and so forth, but that's just about it. You're giving your money away into a fund, and that's it. And some people like that and they feel good on that. I like to have higher returns on my investments, and that's why we help people understand how to invest with the ultra wealthy mindset, which is always control. We want control over our investments, we want control over our assets, but at the end of the day, even if we're getting excess of cash flow and you're someone that already have, let's say, $1 million coming in per year on cash flow after all expenses are paid, and even higher, let's say you're making $500 million, then you need to allocate that in different assets, right? So our job now becomes allocated money at all times in sound assets. So we're looking for different deals. We're looking for entrepreneurs, anybody that has something that is valuable and worth investing in, so that we can get high returns on investment and fast. We want our money back fast, right? Once we have that excess of cash flow coming in and we have millions of dollars coming in, we gotta move that money, even if we have tens of thousands of dollars coming in. When that happens, our job is always to move that capital into sound investing into different asset classes. So I have a diagram by the end of this live stream and talk. If you're listening to our podcast, and you can go to our YouTube channel and subscribe there, because we are sharing our article on the screen. And if you want to have access to the article, you can just subscribe to our newsletter on our website. It's free, and you will have the article sent via email. And when you don't have time to come on our podcast or live stream, then you at least have time to read something that will make us smarter, right? We go to sleep a little smarter than we were yesterday. That's a good habit to build. If we do that consistently every day for the entire year, we read more, trust me that we will get ahead. It's the little steps that we take every day, the things that we do behind everybody's back. That's what defines us. That's who we are at the end of the day. So spend time with ourselves is good. We get to learn a lot about us, and at the end of the day, we're going to be spending the most time with ourselves in our lives. So let's get to know ourselves, read more, educate ourselves financially, learn how to control our finances, learn how to become great at networking with the right folks, have the charisma that is needed in order to pull in the right relationships. People can detect energies, and people that are vibrating at a high frequency, and they understand the universal laws to manifest. They can feel our energy and our aura. So the more we know ourselves, the more we can stand out among others, and we can attract the right group of people. Remember, we've got to rub shoulders with wealthy people and people that are even higher than we are, because that's how we become wiser. We're learning from the sources, and we're always feeling uncomfortable, and we're comfortable by feeling uncomfortable because we know that that's where we are growing. We must have wealthy as number one priority, become wealthy, and it takes becoming uncomfortable because we're learning, we're stretching, and we are replacing old patterns that we had with new patterns. And sometimes that is difficult because one of the most difficult things to do is change ourselves. Once we are set on our ways, there's no one that can change us, right? But through self-development, that's why it's important that we stay learning, because the more we know we don't know, so we can always grow. So we shouldn't ever feel like we shouldn't change. No, we should always grow and evolve. The more we read, the more we experience. When people go through hardships, when people go through different experiences in lives, and we push it through and we do the right thing even at any circumstances regardless, and we stay ethical and we do the right act at all times, then we have greatness awaiting us, okay? And we always stand on the truth is the most important thing, because the truth is the only thing that will always stay the same. Everything else will change, but the truth, the facts, is important. And in order to do that, we need to know ourselves, and we need to develop our communication skills. Very important when it comes to business and building our wealth, because business is all about people, and we need to not only build our networks. That's why we need to collect emails every day of new leads. So what are we selling? If you like coffee, if you like anything, think of this areas of life that you enjoy the most right now and how you can monetize them. Is there anything? Because today we can create a website, we can do white label, we can find coffee beans on Alibaba or any type of product, and we can put our brand on it. If you created a social media following that is excited about what you're offering and sharing every day, then you can create the brand with it and share the coffee beans or whatever it is that you like. Makeup, right? Create a brand, create something that people want to invest in, that people want to buy and become part of it. Create a culture, create an experience. And we all have something great in us. It's just that a lot of times, knowingly and also on people that are unaware, they're not understanding that they can actually create something greater than what they are today, because they've been listening to other people's opinions and they've been listening to the wrong data. So get aligned, get your team involved in our community here at Master Investor. Start investing in our financial education. And if you have any questions of today's talk, let me know. Let's continue here with the dangers and consequences of REITs. So we said leverage, and then we tax drawbacks. We adore real estate investing because of its tax benefits. The earnings from real estate investing are tax-free because debt is typically used. The tax advantages of real estate are not passed down to REITs. The next one is debt downside. Leverage is another fantastic aspect of real estate investing. Usually, our bank loans us $4 additional for every dollar we invest in real estate. This implies that we can invest in real estate with debt leverage and increase our wealth more quickly. Attend the REIT party, but use caution when dancing. Investing in REITs can be a great way to get into the real estate market without having to deal with the hassle of actual property ownership. But as with any investment, we must do our research, consider the advantages and disadvantages, and come to wise conclusions. We can take use of real estate investing advantages like diversification and passive income without running the risk of ending up the main course of the investor's ball by choosing the correct REITs. So go ahead and don our dancing shoes and join in on the REIT celebration. Just be careful when we invest if that's the route that we want to take. Enhance our REITs. Let's now discuss how to use REITs to boost our options strategies, increase our real estate returns by using options trading strategies to manage risk and improve performance. Now that we have dabbled in the REIT market, we can take advantage of the benefits of diversification and passive income. However, what if we told everyone there was a way to perhaps increase our return and improve our risk management? Discover the world of option tradings, which we may use to boost our real estate earnings from our REIT's assets. To improve our investing game, we will look at a few well-liked options methods in this part that we can apply to REITs. Options, what are they? Options are financial instruments that grant the buyer the right but not the responsibility to purchase or sell shares of a REIT or any other underlying asset at a fixed price or strike price prior to the option's expiration date. Call and put options are the two different categories of options. The buyer of a call option has a choice to purchase the asset, and the buyer of a put option has the option to sell it. Investing in REITs with options, common techniques. Cover call approach. Selling call options on REIT shares that we own is the idea behind this. We get paid a premium income for selling the call options, which might raise our total return. Our potential gains may be limited if the REIT's shares price increases over the call option strike price and we are forced to sell our shares at that price. Investors who anticipate little upside potential but are bullish on the REIT in the near future might consider this strategy. Protective put strategy. As a kind of insurance, we might purchase put options if we own shares of a REIT and are worried that their value might decrease. We can limit our losses by selling our shares at the higher strike price of the put option if the price of the REIT shares drop below that of the option. Although the put options premium costs money, this technique can shield our investment from market downturns, lowering our total return. In our top picks, the cash secure put strategy entails selling a put option on a REIT that we are considering buying and reserving the funds required to purchase the shares in the event that the option is exercised. The put option will expire worthless and we will keep the premium as income if the price of the REIT's shares remains above the strike price. We will be required to purchase the shares at the strike price, which may be greater than the current market price. If the share price drops below it, investors looking to produce income and ready to purchase the REIT at a fixed price in the event of a market decline can consider this method. Vertical spreads on the same underlying REIT call or put options with the same expiration date, but various strike prices are concurrently bought and sold in vertical spreads. These tactics might be applied to increase revenue, reduce possible losses, or capitalize on certain market assumptions. Purchasing a call option with a lower strike price and selling another call option with a higher strike price is known as a bull call spread. If we think the price of the REIT's shares will climb somewhat, we can utilize this method to benefit from the increase while keeping the cost of the options to a minimum. Unleashing the double dips power. We typically invest in real estate to generate passive income. Rent collection is a satisfying task every month, but why end there? We can also include the passive revenue from trading and options. We are able to double dip. The first dip, profits. Dip number 2, choices. Our REIT investment may benefit from the added complexity that option techniques can bring, which can help us better control risk and possibly increase profits. When implemented properly, options methods can enhance our investments in REITs and assist us in reaching our financial objectives. Options trading, however, is not for everyone since it necessitates a thorough comprehension of the underlying tactics and associated dangers. Make sure we do our research and educate ourselves financially before we jump into options trading with REITs to make sure we are making wise choices. To sum up, using option strategies to manage risk and improve our REIT investments can be very effective. We may maximize our real estate investing potential through options trading if we take the time to educate ourselves, start small, and adhere to a well-defined plan. Just keep in mind that there is no one-size-fits-all approach to investing. Instead, we should always take our own financial circumstances and risk tolerance into account before making a decision. Use the cash flow tetrahedron to accumulate true wealth. As you can see on the screen, that's the diagram where it shows basically the figure, the tetrahedron, where it shows our businesses paying for expenses, for all of our expenses, buying real estate, buying other assets, and our expenses are other assets as well. Paper assets are part of our expenses. So our money is coming from businesses going to their expenses, and our expenses have invested in it. It has paper assets and has other assets, and our businesses are also putting money down for our real estate investments that we're going to acquire actively. Okay, so we can turn our businesses' passive income into more passive income, and that's how we compound true wealth. That's how we literally tap into the velocity of cash flow. The diagram of the cash flow tetrahedron shows exactly how we should obtain everything we ever wanted for free legally by building and acquiring cash flow in assets that buys other assets from other assets classes. As we can note, we must control businesses that can buy as an entry into other healthy investments. Wealth is measured in the free time that we have to thrive without working for money and have everything paid for with our passive income and capital gains income from our assets column. Wealth ultimately is total freedom. If you enjoyed today's talk, let me know if you have any questions. I appreciate you being here, bringing you the good and bad news of money, the business principles that work in all economies. Today we titled this topic, Invest in Real Estate Investment Trust, REITs. Again, we want control. So it's up to each member what we want to do moving forward, but you have the options. Make your choices wisely. Figure out what is the lifestyle that we want to have and reverse engineer that lifestyle, okay? We need to have passive income. If we want $1 million per year, then we need to create more than $2,750 of positive cash flow every single day after all expenses are paid. That's positive cash flow in order to have $1 million per year. All right, stay extraordinary and wealthy. Thank you for listening to another valuable talk. Bye for now.